At this time, all participants are in a listen-only mode. A question-and-answer session will follow the formal presentation. If anyone should require operator assistance during the conference, please press star zero on your telephone keypad. Please note that this conference is being recorded. I will now turn the conference over to our host, Tony Sklar, Senior Vice President of Investor Relations. Thank you. You may begin.
Thank you, operator, and welcome everybody to the Ideonomics second quarter 2021 earnings conference call. Joining me today, I'm pleased to have Mr. Alf Poor, our Chief Executive Officer, Ms. Kristen Helsel, our Chief Revenue Officer, and Mr. Connor McCarthy, our Chief Financial Officer. A webcast of today's call will be archived and available in the Events and Presentation section of our corporate website for a minimum of 30 days, and as a reminder, this conference is being recorded. During the call, we will make forward-looking statements such as dialogue regarding our revenue expectations or forecasts for the quarters and full year fiscal year 2021 and 2022 related to our business. These statements are based on our current expectations and information available as of today and are subject to a variety of risks, uncertainties, and assumptions. Actual results may differ materially as the result of various risk factors that have been described in our periodic filings with the SEC. As a result, we caution you against placing undue reliance on these forward-looking statements. We assume no obligation to update any forward-looking statement as a result of any new information or future events except as required by law. In addition, other risks are more fully described in the Ideonomics public filings with the U.S. Securities and Exchange Commission, which can be viewed at www.sec.gov. Today, August 16, 2021, the company filed its 10-Q with the SEC and afterwards issued a press release announcing its financial results. So participants on this call who may not have already done so may wish to look at those documents as we provide a summary of the results on this call. The format for today's call will be as follows. Mr. Alf Poor, our CEO, will speak to the company's overview, business strategy, and context around the activities and developments for the second quarter 2021 and into Q3 so far. Ms. Kristen Helsel will speak to the company's second quarter revenues and further revenue growth opportunities. Mr. Connor McCarthy, our CFO, will speak to the company's operating and financial results for the second quarter 2021. It is now my pleasure to hand over the conversation to our CEO, Mr. Alfred Poor.
Thank you, Tony, and thank you everyone for joining our Q2 earnings call. We're excited to be in front of our investor community today. We have come out of the blocks hard and fast in 2021, driving and upgrading all aspects of our business, and this has us well positioned for the continued execution of our strategy. Ideonomics has continued to strengthen its business quarter over quarter, and Q2 was another significant quarter for the company. We operate two distinct business units, Ideonomics Mobility and Ideonomics Capital, and both are positioned to take advantage of the growth opportunities in their respective sectors. Our M&A and investment strategy has remained steadfast and has brought some incredible companies and leadership teams into the Ideonomics Mobility family in 2021, including Wave, Energica, Solectrac, US Hybrid, and P. This gives Ideonomics the most complete offering to meet the needs for commercial fleet operators in the transition to zero-emission vehicles. I will begin my update with the Ideonomics Mobility business unit and the operating companies onshore here in the U.S. Ideonomics is executing on what we believe is one of the most compelling, vertically integrated offerings in the EV sector. We have best-in-class leading technologies and the talent required to leverage our presence in the most significant global markets. These, coupled with innovative financing and cross-selling opportunities, are enabling us to unlock demand from fleet operators. We're a global company with operations in several countries, so as I said, I will start with our US-based operations and Wave, our wireless inductive charging business, which is benefiting from assimilating into the Ideonomics family, and we are seeing the uptick in orders and interest that we anticipated when making the acquisition. In terms of pipeline development, which Kristen will elaborate on, we are working with a number of transit authorities, port systems, and commercial fleet operators who have recognized the advantages of utilizing high-power wireless charging systems. This has us confident we will achieve significant revenues from these types of commercial customers. Fleet operators are also showing heightened interest in Wave systems for use in conjunction with autonomous vehicles, as wireless charging is a critical part of making driverless commercial fleets a reality. In recognition of the incredible potential of Wave, We are also investing in our IP and patent strategy for both the existing and future WAVE products. We completed the acquisition of US Hybrid late in Q2, and this provides us with access to a very meaningful set of technologies and components, from hydrogen fuel cells through to vehicle integration capabilities. And we are preparing to help them scale their capacity to service both our Medici brand, as well as developing their ability to service OEM partners at scale. This is an outstanding acquisition by Ideonomics Mobility, and like WAVE and Solectrac, is transformative for us, as well as the value of its contributions to the broader group. We also completed the acquisition of Solectrac late in Q2, which means Ideonomics Mobility has the only made-in-America EV tractor in market at this time. We have invested in an exceptional CEO and management team to help scale the Solectrac business to meet the market demand, as Kristen will speak to shortly. Our Medici Motorworks division continues to work with OEM partners to bring a range of competitive commercial vehicles to market, with an emphasis on those commercial vehicles which offer us attractive margins such as buses, tour buses, yard tractors, trucks, and other types of vehicles in the heavy commercial sector. In addition to the OEM partner capabilities, we are working to integrate WAVE and US Hybrid capabilities into our vehicles, and we anticipate having those vehicles in market in 2022. We will begin to start to show some of this over our social media channels. In the meantime, we will continue our marketing and homologation efforts, which you will be seeing more of in the coming weeks and months ahead. And to that end, the first 125 kilowatt WAVE unit has been delivered to an OEM partner for integration into the yard tractor product. This integration is an important milestone for future sales in the port and warehousing markets and keeps us on schedule for our 2022 plans. Looking at our overseas businesses, our MEG business has been entirely reorganized in the first 2 quarters of the year, and we are now referring to it as Ideonomics China as we begin to extend the products and services available beyond MEG's current scope and offering. We are progressing our introduction of the WAVE charging system in China, and this is in response to market interest. The process for WAVE to enter the region will take us into 2022, as high-power charging systems are subject to local certification standards. To help us market WAVE more broadly in Asia, we have developed new partnerships and other strategic OEM relationships, and we are pleased with the level of interest in our vehicle procurement, financing, and now WAVE systems from ports, transit authorities, and commercial fleet operators. The deal we had previously announced with BYD and DiDi for 2,000 units of the D1 ride-hailing vehicle is being restructured at this time, as the timing for proceeding was interrupted by conditions on the ground in the PRC. We'll provide further updates in the future, and in the meantime, the deposit for this deal remains held at BYD and will be satisfied in the future restructured deal. In our 2- and 3-wheel businesses, Tree Electric has been impacted on an ongoing basis from COVID-19, the Delta variant specifically, but has been able to make progress despite the challenges the pandemic introduced. And Kristen will elaborate further on that during her remarks. Our investment in Energica has performed well, with an increase in the value of the share price up around 70% since our investment, based on our investing at 1.78 euros and the stock's current trading range of 3+ euros. They continue to lead the EV performance motorbike industry globally. We recently visited with Energica and Silk EV in Italy, and we are pleased to report that both companies are building exceptional products for the performance market, supported by what I would consider to be the strongest technical teams available anywhere globally. As you will see from our recent announcement, we concluded an investment into P, which is a division of Prettl, a German global Tier 1 supplier of electronics and components to some of the world's largest automotive manufacturers. The deal includes an agreement to be the exclusive sales distributor in North America for P. In addition to the association with Prettl, which is arguably among our strongest partnerships to date given their Tier 1 OEM clients, their technology is best in class and will be an important entrant into the grid edge sector, with energy storage and ultra-high power smart charging systems which can be deployed on a temporary, semi-permanent and permanent basis, using a blend of clean, renewable and grid-based energy. This is an important product for the charging market and one which will be a key revenue driver for our new infrastructure division, which will be announced in the coming weeks. I want to conclude the Ideonomics Mobility division by stating that we have put together an exceptional offering across the full value chain of commercial EV and zero-emission vehicles. This offers our shareholders the ability to participate in the tremendous potential of the entire commercial fleet sector, with the added advantage of being diversified within a single stock. We have purposely assembled over the course of the past couple of years, and more specifically the past 12 months, the most comprehensive offering of EV assets anywhere globally, and we are now in the execution phase of what will be exciting times for the company and its shareholders going into 2022 and beyond. Our vision for the next 36 months is to help shape the future of commercial fleet operations across the three key areas evolving as part of the transition into zero-emission transportation, which are vehicles, charging, and energy. In addition to the reduction on carbon emissions and the reduced total cost of ownership benefit versus gasoline and diesel-based fleets, we are also introducing innovative financial products which will enable fleet operators to switch their capital investment model from CapEx to OpEx by offering charging as a service and vehicle as a service, and also energy as a service in deregulated markets. We believe the shift from CapEx to OpEx will have a profound effect on fleet operators, accelerating the adoption of zero-emission fleets by removing the obvious barrier to entry of having to invest in new products and infrastructure. Turning our attention to Ideonomics Capital, I want to start with Timios, who had a record quarter in Q1, a strong quarter in Q2, and has got Q3 off to a strong start as well. Kristen will speak more about their business in her segment, but it has been a pleasure working with the Timios team through the acquisition and assimilation into the Ideonomics family, and we have some exciting initiatives that we'll be working on in the coming weeks and months to further increase their revenues, including working with the MDI Keepers Fund, which we recently invested in. MDI Keepers is a for-profit fund with partnerships at more than 100 minority banks and lenders, and that initiative will see Ideonomics and Timios working to help our minority communities through both cost savings and wealth creation, while bringing in revenues for Timios. So we're excited to be working with the fund on such a meaningful project. Delaware Board of Trade, or DBOT for short, is going to relaunch later in the year as Justly, an impact investing platform focused on ESG-based investments. We will have more on that for you in the coming weeks, but I would like to share with you that we've recruited exceptional talent to come in and support the relaunch, and I'm excited to see this project underway. We have recently concluded a follow-on investment with TM2 after their successful launch of their technology metals exchange after a couple of months ago, and many of the metals they're helping to bring to market are essential for the development of the EV, automotive, and aerospace sectors, and providing the supply and demand sides of pricing discovery for these metals for the first time is going to help the market manage the ever-increasing demand for increasingly important metals such as indium and rhenium. In addition to the increasing value of their business and in turn Ideonomics investment, this provides Ideonomics with informational access into the supply chain and pricing for the raw materials which are becoming prominent in the markets we are active, including precious metals in batteries, electric motors, and hydrogen fuel cells, the insight into which helps inform planning and decision-making within Ideonomics Mobility. TM2 has the potential to become a market leader in this space, and their team has impressed us with their ability to navigate the launch of their platform, which included NASDAQ as their partner, and the growth they are currently experiencing. As I have outlined today, Ideonomics is in an extremely privileged position, and I want to say a big thank you to everyone involved in helping us build a world-class organization, and that includes, of course, our large and diverse investor base. Shane McMahon has recently taken on the role of chairman, and has come in to help us with the anticipated growth by bringing his energy, his network, and his public profile for the benefit of Ideonomics and its shareholders. Well, we'd like to say finally to our shareholders, your interest in our business has provided us with the ability to pursue our strategy, and we are both humbled and thankful for the tremendous investor support we receive. We're here first and foremost for our shareholders, and I want to thank you for joining us on this journey as we enter the next phase of our business and unlock the full potential of our family of synergistic operating companies, and deliver back to you the share price appreciation you joined us for. Thank you again for joining us on today's call. I will now hand you over to Kristen Helsel, Ideonomics Chief Revenue Officer.
Thank you, Alf. Joining Ideonomics in the second quarter of 2021 as the Chief Revenue Officer meant I spent the majority of my time during the past 90 days meeting and working with our teams, developing our businesses, identifying new and synergistic opportunities, and executing our plan. We acquired U.S. Hybrid and Solectrac toward the end of the quarter, and I know both will be strong contributors to the future of Ideonomics. We continue on the path toward leading worldwide transportation electrification and delivering on our commitment to build a company that offers outstanding solutions in clean tech, charging infrastructure, components, vehicles, and financing to enable and speed EV fleet adoption. With the anticipated infrastructure bill as a driver and IDEX mobility as a beneficiary, we are very well positioned. One of the joys of my role is that I can spend time at each of the businesses in our current EV ecosystem, working at the subsidiary level to strengthen these operating companies, build the sales pipeline, and deliver financial results. For example, I've recently had the opportunity to work with Dr. Abbas Ghadarzi, our U.S. Hybrid CEO, and his leadership team to identify and pursue opportunities to commercialize their most popular products, which range from DC-DC converters to hydrogen fuel cells. As we look at the Ideonomics mobility EV infrastructure business moving forward, we continue to expect strong growth in the U.S., positively propelled by favorable legislation from the Biden administration. Q2 was exceptional for Wave, our wireless charging subsidiary, with continued revenue improvement over Q1. The team has been able to add much-needed resources, and worldwide demand for wireless charging is growing as companies recognize the benefits of installing Wave's charging infrastructure. Our Salt Lake City-based team has added engineering, manufacturing, sales, and marketing resources, expanded facilities, and we now have a strong pipeline heading into Q3, accompanied by a growing multi-million-dollar backlog. Since joining Ideonomics, we have helped Wave shift their strategy to open up new lines of revenue and new markets. Our goal is to have Wave become the charger of choice. It is abundantly clear that every major commercial vehicle manufacturer is committed to vehicle electrification, and that, plus the potential for autonomous vehicles, make the Wave product very attractive. These partners are drawn toward the safety and cleanliness from the elimination of messy cables, especially during a global pandemic. With greater than 92% measured efficiency, coupled with the millions of vehicle miles and thousands of megawatts of power that have run through our many successful Wave deployments, we expect aggressive adoption of the system across the transit, port, and commercial vehicle sectors, with our sales pipeline today exceeding $100 million. For example, our Sourcewell win was significant, as Wave is the only wireless provider, and we expect this will positively impact our revenues for the next 4 to 5 years. In Q2, Ideonomics purchased the balance of Solectrac, taking our ownership position from about 20% to 100%. We have hired industry veteran Manny Iyer as CEO, and we are thrilled with his impact on the business. Manny has spent his career in the tractor industry, and his leadership has already allowed us to attract a team that is mission-aligned with vast and deep tractor knowledge. We currently have reservations for more than 100 e-tractors, which will deliver more than $3 million in revenue when fulfilled, with the number growing steadily. The launch of our new E70N model was flawless, and there is strong demand throughout California for tractors in this segment that are specifically designed with a narrow body and are powerful enough for commercial-level farming and vineyard operations. Solectrac will continue to market its products directly, but will benefit enormously in 2022 from work we are doing to establish a dealer and distributor network. This aligns with how tractors are sold today, and will help Solectrac achieve mainstream brand recognition while we ramp our production capabilities. We are hopeful that the current supply chain issues plaguing most of the hardware industry can be resolved quickly, and that we will have a very strong finish in 2021 and rapid growth for Solectrac in 2022 and beyond. Agriculture is a very large market, both domestically and globally, and is currently underserved for EV. Our e-tractor solutions are clean, more powerful, and offer a lower total cost of ownership while protecting operators, their employees, and their surroundings from toxic greenhouse gas emissions. We intend to take full advantage of our first mover position to capture market share and build an exceptional brand which every farmer, both large and small, can rely on for zero-emission performance and reliability. The innovation engine at U.S. Hybrid continues to have strong forward momentum. In Q2, we were able to close on this acquisition and look forward to implementing a plan for commercializing many of their most popular products while continuing to develop the EV future, including hydrogen fuel cells. We are actively growing this team in response to anticipated market demand for their products, and as part of that growth, we are helping them to move into a facility close by, which is nearly 4 times as large as their current headquarters location, to facilitate the transformation of their business. Already, U.S. Hybrid has delivered a strong multi-million-dollar backlog for the balance of 2021, and we expect our influence and investment into U.S. Hybrid to begin bearing fruit from a commercial perspective in early 2022. The second quarter was difficult for our Treelectric team in Malaysia. COVID continues to ravage the country, leaving them in complete lockdown until vaccination rates increased significantly in the region. Work continued slowly and carefully in our new showroom and in our new assembly facility. The Treelectric management team has been using this time to identify new partners to expand and refresh our current vehicle offering. The vaccination rate in Kuala Lumpur has surged in recent weeks, which makes us hopeful we can achieve significant deliveries on our large existing contracts in Indonesia, Malaysia, and Thailand, while looking at expansion into adjacent markets like the Philippines. That optimism is tempered by the COVID Delta challenges throughout other ASEAN markets, and especially in Malaysia outside the capital. We are targeting a strong finish to 2021 as this team returns to selling our two-wheel bikes. The first 2,000 vehicle units of the T70 are arriving at our assembly facility between August and September, which will allow us to move quickly toward that goal. Our Medici Motorworks division continues to provide a significant opportunity for our team to homologate important commercial vehicles into the U.S. market and leverage our WAVE and U.S. Hybrid technologies. We expect that we will have demo units in the market in 2022 and significant activity in 12 to 24 months from two-wheelers to yard tractors. Our China team had a tremendously successful second quarter, nearly doubling their revenues versus Q1. As Alf mentioned, the deal we had previously announced with BYD and DiDi for 2,000 units of the D1 vehicle is being restructured. That said, we expect continued growth in both the EV ride-hailing sector and several new initiatives that should impact the Ideonomics China revenue during the second half of the year. Turning toward the Ideonomics capital business, Timios, despite a nationwide downturn in the refinancing market in Q2, which was mostly due to market uncertainty about short-term interest rates and inflation, was able to limit their decline during a quarter that was only slightly below their record Q1. At the same time, the Timios organization took advantage of the emergence from COVID to launch a new revenue stream with their default division, and growth in the appraisal division has been terrific. Moving forward, I expect Timios to continue their positive revenue trend with a focus on both